Well, good morning, everyone. Thank you so much for joining us for today's webinar hosted by the U.S.-India Chamber of Commerce, Dallas-Fort Worth. My name is Neil Gonaguntla, and it is my pleasure to welcome you all to this webinar. Joining us today, we have two panelists, Dayakar Puskoor, who's the managing partner of Naya Ventures. It is one of the only venture capital firms in Dallas, and it's one of the few venture capital firms that was founded and is actively managed and run by an Indian American. So we're very proud to have Dayakar with us from Naya Ventures. Also joining us today, we have Ajay Mago. Ajay is the managing partner of EM3 Law. They're a full-service law firm, and they work with startup companies and help with technology commercialization. So I don't want to take up too much time. I want to go ahead and jump right in because we have a lot of extremely insightful information to share with all of you today. But I did want to let you know that the Chamber has been hosting a series of webinars over the course of the last 2 months. And COVID-19 has just really upended everything that we've thought about business, about how we do business. And so these last 2 months, the Chamber has taken the opportunity to bring in thought leaders on a variety of topics who can share their thoughts with us on how we should be thinking about business as we move forward into the future. So you can find a series of webinars at the Chamber's YouTube channel. So if you go to YouTube and you Google US-India Chamber of Commerce DFW, you will find that information there. I also wanted to let you know that all of our webinars are educational and informational only. We recommend that before you act on any of the information that you receive or learn in today's webinar or in any of our webinars, that you consult with the appropriate professionals, be it lawyers or accountants or CPAs, and that you make sure that whatever you are thinking about doing is actually in line with the advice of the professionals that you've hired to guide you in your business. So again, this is purely educational and informational today, and so we encourage you to just make sure that you check with a professional before acting on that information. I also wanted to let you know that coming up, we have a few other webinars on the horizon. We have a program on the Indian supply chain, so what it means to build your business out maybe in India. And we'll be hosting a few experts who understand the Indian supply chain and can talk about the opportunities that exist in India coming out of COVID-19. Additionally, we have an upcoming webinar with our friends at Morgan Stanley, who will be talking about the economic outlook over the next 6 to 12 months, and that program will be hosted in about 10 days. So look out for emails for both of those programs. If you do not receive the Chamber's email and would like to be on our mailing list, you can do that two ways. You can either go to the Chamber's website, which is www.usicoc.org, and at the bottom right-hand side of the homepage, you can go ahead and subscribe directly to our homepage there. Additionally, you can also send us an email at info@usicoc.org, and we will be sure to add you to our mailing list that way. We have been sending out a number of newsletters related to COVID-19 with information that businesses need to be thinking about. If you think that would be useful for you, I'd encourage you to join our mailing list. So with that, and without further ado, please help me in welcoming Dayakar Puskoor and Ajay Mago. We can go ahead and share slides at this point. And so today we're going to be talking about opportunities for startups to really find both investment for their startup, but also insight and partnership with seasoned entrepreneurs, and that's what part of today is about. But I think what's more intriguing for me, and maybe for many of you, is that we're also going to be talking about why now is the best time to invest in venture capital. If you have a little bit of uncertainty about the markets, you're not sure exactly where to park a lot of your hard-earned success and money, and I think you'll be interested to learn about investing in venture capital as an alternative investment. And so today we're going to be covering both of those topics. And we'll just quickly go through a bio of both of our speakers. So if we can advance to the next slide. We can, so Ajay Mago is he's the managing partner of EM3 Law. He has had a wide range of experiences working with KPMG and First Market Software. He became a partner with Dwayne Morris after clerking for the federal courts. And most recently, he founded EM3 Law. They're a full-service law firm that works with startups, but also with established companies and helps them with a variety of legal issues, and they also provide legal advice. And also joining us today is Dayakar Puskoor. If we can advance to the next slide. Dayakar is, again, the founding partner and managing partner of Naya Ventures. Dayakar started his career at Motorola. He left Motorola and founded his own company, JP Mobile. He built it up and then sold it several years later for quite a significant profit. And he took that money and he invested it into Naya Ventures and into startups. And so he brings a wealth of experience both in building companies, but also exiting companies. And he has lent that experience to the next generation of entrepreneurs. And so we're really fortunate to have both Ajay and Dayakar with us today to talk through our program. So I'm going to hand it over to the experts, and then I'm going to come back about midway through our program to take it forward from here.
Good morning, everyone. Neil, I appreciate that introduction, and we certainly appreciate the U.S. India Chamber of Commerce for putting together this series of webinars to help the Chamber members and the greater business community weather and respond to and frankly thrive in this COVID and post-COVID world. And thank you to Neil, Rachel, Raj, and the rest of the USICOC team for inviting us to share what we have to share and offer any help that we can. Just quickly, a mention of our agenda. We'll be covering the investment stages, talk about why venture capital is an important asset class, describe the trends that we're seeing in venture capital and entrepreneurship, and then also discuss managing and leveraging a crisis. And just to tell you a little bit about my background, I have a bachelor's in information systems. I have a master's in technology commercialization. In the 90s, I was at KPMG, where I helped build out the enterprise software offering in the BPO lines of businesses. In the 2000s, I moved to Silicon Valley and managed a professional services line of business for a pioneering marketing automation company, Market First, which was acquired by Pivotal. Then moved to New York City and focused on cross-border transactions, particularly technology transactions in Asia, Europe, and the Americas. Rose through to law firm partnership at through Mayer Brown, Jones Day, and Dwayne Morris, and built a practice focused on corporate and technology transactions. As Neil mentioned, in 2017, we founded EM3. We're a new age law firm. We're redefining the mission, methodology, and momentum for legal services delivery. And just a little bit about EM3, we're a 15-person mid-sized law firm in 5 major markets: Austin, Dallas, Atlanta, Chicago, and New York. You can see our practice areas span the core needs of a business venture through startup, operation and exit, VC, private equity, M&A, IP, healthcare, privacy, bankruptcy, reorganization, and real estate are just among some of our practice areas. We're a certified minority business enterprise and a member of the National Association of Minority and Women-Owned Law Firms. We have a AV preeminent rating with Martindale Hubbell, and we're recognized by US News as one of the best law firms. So I will, I don't know, Dayakar, if you want to just kind of touch on some of the highlights of your career.
Sure. Thanks, Ajay. Thanks, Neil. Thank you to US Chamber of Commerce, especially for hosting these events during difficult times. So it's been very useful even for me. Some of the events I have attended. I hope our chamber members and others also taking advantage of these webinars. So let me kind of give my background. So as Neil pointed out, like I started as an engineer at Motorola. I was there for 10 years. Learned a lot as an engineer, really how to really build a product, and also how do you take care of customer, and how important it is really to build patents also. I have filed some patents when I was at Motorola. I'm happy to see some of those patents ended up in Google right now. As you know, like Motorola eventually was split, and really some of the part of the company was acquired by Google for patents. So then in 1997, I started a company here, JP Mobile. We are way ahead of technology. That time we didn't even have any wireless networks in this country, but we had this idea, you can do mobile messaging. Now we're doing email and everything from mobile device. So idea was building a product which really independent of really a device or network, and also backend systems. So this company, I'm happy to tell you, like happened to be right time, right place. In 2000, we raised $55 million and planned to go public, but 9/11 happened, then we could not go public. But I would say like we are one of the few companies survived. I would say like maybe there were 200 companies got funded. There are 4 companies survived through that one. Happy to tell you, in 2006, we merged our company with a good technology. Within 6 months, then it was acquired by Motorola. It was a pretty good exit for good technology investors and our investors. Then I was on the board for an advisor for a while. Then Microsoft, I had a short stint at Microsoft to really to build a cloud and mobile platform. So I was fortunate to work with a lot of good people at Motorola, JP Mobile, then Microsoft. I was able to learn really, as you can see, not only the mobile but also the cloud space. So I'm happy to see right now the mobile cloud. These 2 technologies have become really basic infrastructure for any products we launch today. So I could not move to Seattle. I left Microsoft and started investing my own money into some companies. Then 2011, launched Naya Ventures with my partner here in Dallas. As you can see, like I always been in Dallas. After moved from Florida with Motorola, felt really Dallas is the right place to start a company and also start a fund. It's been very difficult. It's not easy to be a venture cap in Dallas, but I'm happy to tell you, like if you look at what's happening right now, if we see like even products and also infrastructure software and a venture investing, it could be anywhere in the world. You don't have to be in Silicon Valley. So that's one thing really we proved. There's no monopoly for startups or venture funds only the Valley only. You could be anywhere and able to reach companies anywhere in the world. So I'll talk about it in my next slide. Ajay, if you could really kind of give what Naya Ventures is. So just kind of do a quick really what we did, like in 2011 we started with the small fund, invested in 17 companies, very early stage companies. Now after that, we invested 4 more companies, total 21 companies. I'm happy to tell you, some of these companies, after we invested, we were able to get other investors from the Bay Area and Seattle and other places, other venture capitalists, and also corporate VCs to invest close to $140 million in our portfolio companies. So also really we had our own learnings. We had some of the companies done well, some companies really did not do well, and we had so far 5 exits, and we see right now our portfolio company enterprise value close to $600 million. And I'm happy to give you one success story, company called Altia Systems, where we involved from the beginning. Pretty much I became a product manager for the company for 3 months, based in Cupertino, California, where we were able to help them not only do the product strategy, but also build the right product for enterprise. Then really able to work with the ecosystems and where Cisco and Microsoft and all that. I'm happy to tell you this product was actually licensed by Microsoft. It's an AI-based camera with giving 180-degree view. And their company was acquired by one of the companies in Europe. It's called GN Audio, which is a parent company of Jabra, for $125 million with $5 million revenue. So this is one thing I would like to emphasize here. Same thing here. These guys also have a lot of patents. Same thing. JP Mobile had 8 patents when we sold the company. Some of those patents were used by good technology to sue BlackBerry. Then BlackBerry paid $250 million for those patents. So I always emphasize being a product guy to make sure you build the technology and a patent portfolio and all that. So what we focus, our criteria is mainly more of a generalist software, infrastructure software, starting with, as you can see, the mobile, cloud, big data. Then really AI, ML has been applied to every one of these things right now. What are the size of investments we've been doing right now? In the beginning, we did small checks in fund 1. And a very, very early stage. But now, last 2 years, we've been writing anywhere, $2 million to $5 million checks. So we started with maybe, $2 million, then we can go all the way to $5 million in a company. What we look for right now, a company has at least a product market fit already, and some revenue, traction already happening, where we can help the company. Right, we look at 3 areas. We can help the company scale, especially in the business development, then help them maybe do next level of fundraising. Hopefully, also kind of help them really, strategic partnerships. That's what we did with the Altia. And other example I would like to give here, also a company, as I said, even though based in Dallas, we've been investing all over the country here in Florida, in Seattle, and also the Bay Area, and even India too. One of the companies we invested, a company called Hyperverge, which started actually in IIT labs, and we were able to work with them and get investors also from the Bay Area. I'm happy to tell you there's been a great story started by 3 founders. Now there are close to 90 people in Bangalore, and they have customers all over the world right now, doing very well. So these are some success stories with our fund, and we also had a lot of lessons learned. Especially when you're going from an entrepreneur to a entrepreneur investing with an entrepreneur. What are things you can do, what you cannot do. I can pretty much write a book about these lessons learned. So I can talk about those details later, but I'd like to next slides. So just kind of give you for founders right now who are in this call, and also investors or people who are planning to invest in startup companies. If you look at really when for a technology company, you have different options open. You have started with a bootstrap, friends and family. This is where you want to make sure even though you start friends and family, you get some good professional help from the beginning. I have seen, especially Ajay and team, how they have helped our portfolio companies from the beginning itself. So it makes a big difference. You start with really right structure and all that. Then they have to stay with you all the way until you have a good strategic partner and plus exit. So you start with the friends and family. I call that round is like a big bar of steel, pretty much. Where that's where you'll be able to get a product done. Nowadays, you can really do a product at that stage. We could not do when I started my company, especially we had to, go ahead and build our own data center and all that. Spent almost $5 to $10 million building our own data center. Now you don't have to. You can go to Amazon and put your credit card. Pretty much, you can start really an application you're planning to build using Amazon Cloud or Azure. So then really you kind of look at, seed capital. In the seed capital stage, you want to make sure, people who can help you, if they are a healthcare professional and know the healthcare industry, if they're coming from financial industry, they can help you the product you are building with some connects, and also able to help you also introducing to the next level of investors. So the next level will be, Series A. That's where we come in right now, all the way to Series B and C. So this is where really you want to make sure, like by the time you get to Series A, you have the product and you have a small team in place. I call a three-legged stool. A product guy, a good sales, and a good CEO, three in place, with at least a product already sold to a few customers. So you have a good market fit. So now, you want to work with the venture funds who can help you to, at least get from that $1 million revenue to, or less than $1 million revenue to get to $5 to $10 million revenue. Once you get to that $5 million revenue, $10 million revenue, then you can go to, Series B and, and C. Then after that, really private equity guys, and there are, some other options also available. Sometimes I would call like options like really where venture debt also is available for some people. They don't want to give up so much equity. That's a pretty good option. I know like here in our town also in Dallas, Cypress Capital actually provides, venture debt. They've been doing a pretty good job. So I think like you have different options available, but you have to select what is good for you and what is not good. So other thing also I just want to mention, as you can see, early stage venture capital has been able to really give anywhere like this is a 5 to 20x multiples for their investors. And as you can see, angels also have done very well, and PE companies also done well from giving it anywhere 2 to 5x. Next slide, Ajay. So one thing I wanted to kind of, what venture capitalists look for really, right? So how they evaluate a company, first thing is really, we look for, or any other VCs also look for the team. The most important thing is, the founder is he committed, is the team is committed, because it takes a long time to build a product. That's what I kind of call it. Even venture fund also takes a long time to really to show results. That's what they call pretty much it takes 10 years for a venture fund or a GP to get really results. So it's a marathon, it's not a sprint. So startup is also marathon. You want to make sure like a right team and also product. Is that idea really trying to solve a problem? For if you are focused on B2B, are you giving a painkiller or are you giving a vitamin? So that's the one kind of always I tell people, try to do your own test. If you're trying to really sell this product to a customer, are you giving a painkiller or are you giving a vitamin? Then look at the market size. Is a big enough market size? Because really, there are some great companies are built, nothing wrong. But if it's not at least to, few $100 million market size, most of the VCs would not be interested, because they are looking at those multiples because of the risk they take, early stage investments. So again, have it, validated product, like pain points I talked about. Other thing also, how this product has been built. The good thing about right now, people who are building companies for these founders, now you can build really products where you don't have to really kind of do these big enterprise deals. You can really build a product, using a Salesforce platform, or you can use really any other platforms like even Microsoft, and where even I'm looking at Microsoft Teams like right now. Amazing how many products are going to be built, and using that collaboration platform for you to build some products on it. So there's nothing wrong really using any of these distribution networks. So in that way, you get network effect pretty quickly. You don't have to really kind of do old way of hiring a bunch of enterprise salespeople, wasting a lot of time. So now the whole market has changed. Go-to-market is a lot, faster right now, but also you had been the, distribution channels like really, as I talked about, it could be Salesforce and all that. Then really, the deal terms, like they look at really, the deal terms with founding company, founders, how much they're going to keep, as a company, and also how much the VCs also going to as equity. They always ask for preferred equity. As you know, most of the VCs, they will not invest in common stock. Then really, what are the, exit strategy? Some companies are built well, but the founders want to build into a $1 billion company without exit or without IPO. So VCs have a timeline, as you know, most of the VC funds have a timeline of 8 to 10 years. So they have to get those, exits. So you want to make sure like really you're aligned with the VC, and the VCs also look for that alignment with founders. Next slide, Ajay. So this is kind of quick, really. I'm not going to go through the whole details here, but as you can see, as there are some great angel investors. They have done very well, especially in the Bay Area. Then you can see there's some great venture capital firms also have done very well. So what are the really, if you look at the major differentiation points, really, if you look at angels come in early, then ventures stay from all the way from Series A to seed all the way to C and D different rounds. So most of the time, really, as an angel investor, you get a common stock, but as a venture, you get a preferred stock, and also most of the time, once really, a VC invests $2 to $5 million, they get a board seat and all that. So there are a lot of really, also, rights, as a VC, you get to invest in the next rounds and all that. Sometimes angel investors may not get those rights. Other thing also really, one of the, major differentiation point is really as an angel, you're a single investor, investing, but as a VC, they have a professional team. They're able to help the company in all different areas, where they're able to also, when they're investing, going through due diligence process using their network. For example, for our company, we have close to 15 advisors. These advisors really can help portfolio company in business development, or it could be coaching. For example, one of the companies we invested in India, HyperWatch, we are able to get them a pretty good advisors from our network, and they've been working with them very well, and it worked out for the company and for our advisor and for the fund also. So it's a win-win situation for everybody. Strong mentoring team and early stage, some angels, as I said before, would do a pretty good job if they are really experts in some areas. And so here, as a venture fund, really, you have where you're able to help also the company, how you get the strategic partnerships, eventually, hopefully, opportunity to exit. So this is a kind of quick, really, my take on where I started as a founder, starting as an engineer, then becoming a founder of a company, learned a lot of lessons, then really started venture capital. Here also learned a lot of lessons. Now, after 6-7 years of investing, I feel like we have a pretty good model, how we can make this model work. So Ajay, I'll kind of pass to you.
Before you go forward, Dayakar, we have one question here. And it says, is the current situation a good time to start, especially when there is when there's so much uncertainty and fear?
Yep.
And what areas, according to you, are potential opportunities for entrepreneurs to look at?
Great slide. So thanks, Neil. So this is the slide. We as you can see, like our predictions have been really right. I'm happy to tell you. As you can see, I bet on very early in the mobile. That paid off very well. Now I can see without mobile, without cloud, you will not have a lot of companies exist today. If you look at Uber, if you look at Airbnb, you look at any of these companies, Twitter, you would not be having some of these great companies built without mobile and cloud, right? So we're pretty big on these two technologies. If you look at, like you can see, the cloud has become really kind of a infrastructure product today. I kind of call it platform. Even COVID time right now. If you look at is created really, an opportunity for so many, even consumers are really, if you select even business, for example, even restaurant owners right now had to change from, as you know, from in dining to basically takeout. So they're able to use Shopify. These all are the cloud companies and able to convert them pretty quickly into where they can get customers and all that. Same time, because of cloud, some of these companies really able to move their even data centers to all virtual, right? People are able to work from home. So what we're seeing right now, cloud usage has gone up by almost 60%, and I'm pretty sure you must have heard about Microsoft already added close to 30-40 million users just for this Teams product, and I'm pretty sure you heard about Zoom and all that. So if you look at within cloud, you still have opportunity to build products, what I kind of call a really governance and also compliance and also security, where some predictive analytics, and using AI/ML, you can also build some vertical applications. So I kind of call it these infrastructure products. You can see using this, or you can be one of those guys providing these infrastructure products, or you can also build using these infrastructure products other vertical applications. As you can see, healthcare is the one most important thing I can see right now happening, right? Within healthcare, we had to think about, like, for example, like that day, one of my family member, she wanted to, doctor consult. It was so good, so telehealth really been there, but none of us used much, to be honest with you, right? We all went to doctor's offices. We used to sit in the office for 20-30 minutes. Then after that, really, it would take like a, even drive and all that, maybe 1 or 2 hours. That day, my family member really, made an appointment within 20 minutes, and the doctor called, put a camera, she was able to see it, and gave prescription, done, right? So also now, this healthcare also going to change a lot, especially contactless and also driveless, and how we really can provide the services, right? So I think there are some great opportunities. I think other one is really, I look at the education tech. I know VCs shied away from edge tech because of the multiples, but now I think even we are rethinking about education tech. What are the opportunities available? For example, one of the companies we looked at that day, they already developed this platform, how teachers can really use this platform to build curriculum, basically able to take existing content, videos and all that, able to create a good interactive sessions. So I think education also going to be huge, especially here, anywhere in the world. If you look at 91% of kids really not able to go to schools right now, right? So I'm pretty sure most of them really going to go back to schools, but really I think it's going to be a new normal, which is going to be, we're going to have this hybrid way of doing work and hybrid way of learning and hybrid way of really also doing healthcare. So I really think there is some great opportunities in that area. And also construction, right? I think really that's one industry hasn't really done the digital transformation. Now I feel like really they also had to think about, right, to do a lot of contactless, when they're talking to their customers, can they really provide what's going on? If you're a home builder, can you really give without really that homeowner going to the site and all that, a lot of information when they can see, touch and feel, something like that. So I think some great opportunities in some of these areas. I can talk more details in an hour, but these are the infrastructure software available still. A lot of things need to be solved in the cyber security, cloud security, governance, then also these vertical applications. So depending on your expertise, you should choose. If you are a product guy who, like me, more of a generalist, coming from a mobile cloud background, building infrastructure software, you should look at really building something that area. But if you work in the healthcare industry, you see some gaps, what's going on right now, or education, or construction, or financial sector. Go for where you have some expertise. Don't go for something you don't know. So that's one thing my advice would be. But if you already built a product right now, my advice would be right now, even these difficult times, make sure like really, focus. Don't try to get distracted.
So Dayakar, we have one question here before we move to the next slide, and that is, with regard to AI, what are your thoughts on AI in the mortgage industry, and do you think it's ripe for digital transformation?
Yes, really think about right now, right? So AI is already doing this digital transformation. One of our portfolio company here in healthcare, they focus on healthcare. They're doing a great job how to help especially companies who do the revenue cycle management or really any of these, as you know, whenever you go to doctor and after you come out, there's so much paperwork, and right now so many people, so many BPO centers spend time. I'm not saying it's totally 100% is going to be AI solved, but I think we have seen already they cut down 30-40% of the manual work going to the AI. Same thing in mortgage side. If you look at there's so many technology. I'll give you an example right now, right? So it could be mortgage and also insurance. That sector I also have more of in that area. If you look at having aerial pictures, right? If you are a insurance company, if you are a company financing and all that, you want to make sure really when people claim some false claims, or really even cities when they really want to look at have they seen, and some people build some homes or really even they have built a pool without any permission and all that. You can use a deep learning technology from your some of the satellite imagery already available. You can go and build some analytics on it and able to give that to change detection and all that. Right? Some of companies are already doing it. So, but in that area, really, if we can apply where you can cut down the time and save time, and in that way, the company, the mortgage company, saves dollars, right? The two areas I always kind of tell people right? Are you saving money? Or are you also increasing revenue for an enterprise? If you can focus one of those two things, I can apply any one of these technologies, AI, ML, cloud, or mobile and all that, and you'll be able to come with a value proposition.
Okay, I'm just switching slides here, and these are excellent questions, and I think it's very appropriate. You can see in this slide, and this is just touching on the point about is now the time to invest in venture capital. And as you'll see, I mean, we're looking at, in this slide, a quarter by quarter sort of analysis of deal activity. And, I think change was happening even before COVID-19. And what you'll see here is in Q1 20, US deals fell 9% quarter over quarter, with some of that decline likely attributable to COVID-19. But nonetheless, funding still rose 14% quarter over quarter on the back of larger deals. I think the observation that I would make here, and tying it back to that question, is you want to be a venture capital time horizon is 8 to 10 years. But this slide is obviously just showing us, a quarter by quarter analysis. So when you're investing, I mean, this is kind of where you want to be, right? Where there's the greater opportunities. There's folks that are being thoughtful in terms of the trends, following the trends that Dayakar mentioned, AI, IoT, machine learning, and analytics. And so even though there's this decline, with the few investors, entrepreneurs have been focused and pivoting to execute on the new realities and mobilizing that new reality. One point I'll highlight here, and this was a recent deal in Dallas, is Park Hub. Now, Park Hub is a Dallas-based company which provides technology for parking management. It's raised about $30 million, and most notably, it raised $15 million of that during this COVID-19 pandemic. And so when you look at just that type of business, and their business is focused on managing parking for very large venues, venues that you would might host an NFL game or a concert, like the AT&T Stadium in Arlington. And so this deal is interesting because it demonstrates that investors are still willing to invest in the long term for companies that are guarding their balance sheet, shoring that up, making sure there's sufficient capital, and staying true to their mission for addressing significant needs, even though there may be short and medium term challenges. On this next slide, this is interesting because it gives us a perspective of what's been happening in Asia, which is in some senses a leading indicator of what will be happening in the US in the coming weeks in respect of the COVID impact. And in this, you'll see that there was a drop in funding in Asia as compared to North America and Europe in Q1 of 20. And anecdotally, what we are already seeing from our clients is that the recovery in Asia is starting to be more rapid. Over just the last 2 to 3 weeks, we've seen a return to a more natural level of deal activity. And so I think what that means is, you know, in North America and Europe, which we're probably a few weeks or a couple of months behind, we'll also start to see a rapid recovery and normalization in the next few weeks. So, you know, the time is really kind of now if you're just tracking on a funding basis. And then, you know, this third chart really talks about the birth pace of US unicorns. And so you'll see in Q1, there were 6 more unicorns in the US versus Q4 of 2019. And by comparison, there was also 13 more unicorns in Q4 of 2019 as compared to the prior quarter. And so what this is showing is that the market is still recognizing valuations above the $1 billion mark. And, you know, investors are really shifting their investment thesis to more resilient trends. So cloud, AI, IoT, remote working, and they're shifting out of other trends, right? So share economy, you know, there's going to be folks that are going to be more concerned about sharing an Uber or an Airbnb or a WeWork. So, you know, what I think we're seeing with our clients, and I think Dayakar can speak to this more about Naya Ventures, is that you have to drill down in a sector by sector basis to recognize what these trends are and what the impact is for venture investing and frankly for entrepreneurs. And so being cognizant of the trends and you know, having these statistics in mind are helpful, but you know, invest in the areas that you know, or with a venture capital partner that is knowledgeable in that area, and you know, start companies in the areas that you know very well. So with that, I'll turn it over to Dayakar to really start our discussion on how to manage in a crisis.
Thank you, Ajay.
So
Any other question?
Yeah, there are a couple of questions here. I thought you could address them before going into this. The first question is, right now, U.S. employees are working 3 jobs, their day job, then they are taking care of their kids, and they're also providing the role of the teacher to their kids, and due to the social distancing. And so the question is, it's an unsustainable working model for the midterm to long term. How can technology ease the burden and pain on remote workers? That was one question. Second question is, what solutions can startups think to provide? And I think that was a follow-up to the previous comment.
Sure. Okay. So I think you know, I'm going to give a quick to my, you know, I'll try to talk about this one with the healthcare industry, but also it can apply to anything, right? So if you look at, you know, as I mentioned already, the telehealth has been there for now. Education also, we had it, but not many schools use it. There's definitely, I think I see, you know, parents' pain, especially when you have, you know, younger kids at home, and you had to, as you said, like almost three jobs is very difficult. So I think there will be opportunities also to really hopefully ease some of this pain. It could be, you know, where you'll have better tools, you know, education-wise, as I talked about right now, where these kids able to use more interactive sessions with teachers also hopefully becomes easier. You still had to spend time with your, you know, kids, you know, that you cannot forget no matter what, right? So, but I think like there will be tools, you know, going to come in this area in education, especially what I'm seeing, like some there's you know, institutions they used to do mostly in-person training, and some of them pretty quickly able to switch to online, but they do not have all the tools yet, right? You know, for example, even you know, right set of, you know, cameras, you know, going into, you know, these laptops or whatever the devices they're using. I also kind of see like a opportunities in the area for founders or entrepreneurs to innovate. I kind of call almost and this COVID kind of created from this crisis to creation, right? I think like there's going to be with this crisis, there's so many creations going to come. I don't have all the, I'll be honest with you, answers for those, but I can tell you what I know. Right now, healthcare, if you look at really even clinics, right, they need to be, you cannot do the way they've been doing right now, how they need to modify, how they can do really, drive-through clinics, right? For that one, what type of technology you need, right? Then what kind of supply chain you need really, so the communication system you need, specialized care facilities. If there's people who are into the, real estate and all that, they should be able to look at how they use technology to make these facilities, as you know, like unfortunately we've been seeing right now, if you look at in New York and New Jersey, there's so many these care facilities, that's where a lot of deaths are happening, because really that, again, contactless system, how you build it and how you provide those services to those people, right? It's very sad to see so many elders are really suffering because we are not prepared for this stuff. That's what I kind of call reinventing the whole primary care system also is going to happen. Same thing, like you had to look at really, when you're doing the telehealth really, or education via, this Zoom or anything using. So there will be some picks and shovels. I kind of call almost, I'm pretty sure everybody knows this stuff. When gold rush happened, people who made shovels actually made the money, not the guys who are digging. So here also you have to look at what are the tools you can provide, for examination, some, I just select some devices, right? And also documentation. It's like right now for these doctors now, when you're doing remotely, they still have to do a lot of documentation, but how they can be more productive by you using some AI ML technologies to cut down the documentation, right? Maybe, once, when they're, recording some of the stuff, it could be voice or, even videos. How can you convert the stuff into digital and, filed as a, whatever the doctor's examination stuff. And I don't know how to do that one today, but I see there will be tools coming up in that area, right? Then really, all these, online, prescriptions, I know there are already some solutions available, but there's still, in my opinion, areas to innovate here. So I think, and hopefully, who, asked this question, a very good question. Hopefully you're going to see some, technology will be coming out, as you know, like always, especially when you hit by, this kind of stuff, I have some great ideas come out. So I think really, if you look at, I'm sorry, Neil, you have another question on that one before I go to the slide?
Yes, there's one more question here, but I think this is a more specific question that can be addressed later,
okay.
Which says, we are focusing on healthcare and industrial parks in India. What's the best way to raise funding? Okay,
I'll get to that one. Yeah. So let me kind of give you managing crisis, right? As I said, like I've been through this one as an entrepreneur, as a founder of a company in 2000. As I said, like when raising $55 million, we are flying very high. Then boom, 9/11 happens. Customers who are buying our software for $500,000, they all shut down. Your customers are shut down. Luckily, we had money in the bank, but really pretty much, then how do you manage that one, right? So I think the one thing I can say, I've been a young entrepreneur, so I was not listening to my investors. I was burning almost $1.5 million per month, and we're going to run out of money. But luckily, I had a good CFO. He helped me to make sure like we conserve the cash, and that's where really biggest problem is, right? Once you build a company, you hire some great people, and it's very hard. Like where now you had to cut down to get to a stage we had to be in. If you look at, like, let's say right now you have money for only 5 months, then how do you stretch that one to have at least 12 to 18 to 36 months cash? Because this is going to take time. It's not going to come out right away, right? So that's where really, what I kind of call, do a stress test if you are a founder already right now, to make sure like you have at least 18 months to 36 months of really cash. Otherwise really, it's very hard to kind of go and raise money. I also kind of say you should raise money when you have money in the bank. When you're running out of money, also really becomes difficult for you and also you're not in a strong position. So one thing I recommend always, make sure like you have at least 12 to 18 months of cash in the bank, right? So then other thing also, how VCs also invest in crisis, right? As I talked about, before, there are a lot of funds were raised actually in 2018-19. A lot of big VCs are flush with the cash. There's no shortage of money right now. Only the problem is now with this COVID situation, most of these VCs, say like, hey, I need to conserve the cash for my current companies. So because they have done already some of these investments in companies, maybe Series A, B, and all that. Some of them, had to deploy $10, $20 million into each one of these companies. So some of those guys are holding up, but again, some of funds like ours right now, we continue to invest. We, as you guys know, like right now during COVID time, we actually invested in a company in Seattle. We led the round, $8.5 million round, a company called Coldstack. So things are happening, but as I said, like again, if you are in that cloud, you're providing this infrastructure software or an application which is going to be useful for enterprises in a hybrid model, that's where you will shine. Other thing also focusing on coming out of crisis, right? How do you really kind of make sure, not only you survive, this crisis, then, how do you thrive? That's what really, I can tell you, it took like, for me, 6 years, from 2000 to 2006, to see the market open. Then really, you have, the company with some real customers and real revenues. One thing you want to make sure, like you focus on product and people. If you can really think of right now, you already have maybe 5-10 customers. You have provided a solution today, or a product or a Trojan horse, solving one problem. If your customer already asked you, hey, 3 or more features you needed, but you are planning to build those really maybe next 1-2 years, or maybe after you raise the next round of financing, I would say like instead of really spending any money on marketing and sales, and focus on building the product, completing the product. So be ready by the time really market opens. Then you'll be in a better position than your competition. There will be companies, unfortunately, will be go down, right? That's also gives an opportunity. Any of these companies going down, if you need any resources, you could really do aqua hires, or you could really buy companies too. So I think as long as you have money in the bank, you have really spend your time really building the rest of the product what you want to build, and you're already talking to those same customer base, and they are giving you feedback, you will come out very well. That's what happened to us at JP Mobile. Next slide.
Yeah, and just kind of touching a little bit further on that, it really comes down to mindset. And one of the things Dayakar mentioned, coaching, one of the things that we coach folks on, we do a day workshop on it, is really the crisis manage and innovate sort of mindset. And really that's just comprised of 4 elements, and it's consistency, concentrate, contribute, and create. And if you can employ these tools, that it helps you during these times of crisis to innovate and pivot and create new ideas. So as Dayakar mentioned, we strongly recommend focusing on R&D and people. That's the create component of this crisis management and innovate mindset. If you and your teams can focus on creating new products, it will enable your enterprise to thrive. And for entrepreneurs with enough resources, 12 to 18 months of resources with minimal sales, this can be a time, seen to focus on developing a better product, improving automation of internal processes, and keeping existing customers well served. And so these help reduce, as Dayakar mentioned, the $1.5 million in burn. If you can automate processes and be more thoughtful in terms of what your burn is and how you can reduce it, that will, in the long run, make your business stronger and will let you thrive coming out of this type of crisis. Second is really just to be empathetic and reach out to your employees and colleagues and investors on personal levels. In these types of unusual circumstances, people work best with structured processes and familiar routines, and when they truly feel connected. And so, this is the consistency part of the crisis management and innovation mindset. And by doing so, you're taking advantage of the work from home environment and getting people, reconnected through these new types of technologies that people are using more. And then, on the thinking and planning long term, you have to plan for contingencies. You have to think about the different options that you have to pivot. Are you going to go more product? Do you need to invest more in your patents? Or do you need to conserve cash right now for acquisitions? So, we try to kind of encourage people to not be emotional during these times, but to think about and plan for the long term and lean forward into, tactics that will kind of leverage the opportunities right now. And then finally, review your budget and focus on cash flow, and plan for different priority budgets and so that way you can prioritize some of the lower, the unnecessary expenses and get rid of those. And, sometimes you may have to reduce salaries, defer salaries, trade in salaries for equity options. And obviously, you want to work with your venture partner and your legal and human resources teams when you're making those changes. And then, I'd say one thing that we've really seen is there's this growing number of programs available. I think the PPP has been one that has been most publicized, but at last count, as of this week, we're monitoring 30 federal programs in addition to the PPP, and in addition to programs that are available at state and federal and local levels. So there's a lot of opportunities right now for, again, people to shore up their balance sheets and budget and plan out their financial resources for long term. Okay, thank you, Ajay. Again, this is a leveraging crisis. Really, best companies are building during crisis, as you can see. And when you look at Uber and eBay and Slack, so many of these companies built. Again, I go back to my whole cloud. If you could use this crisis and build a product using cloud. One thing I want to mention, this I forgot to mention before, but it's interesting that the cloud technologies, not able to get a lot of traction, especially countries like, I'm talking about US companies, could not get really, some traction in China and all that, because it's more a nationalistic, basically, these countries are kind of, trying to stop really, because the cloud being where you have information, stored in different places. So they want to, these cloud companies only within the country. So there are opportunities, people could be, building in China or India if they want to build real infrastructure products, cloud itself also. There are opportunities to work with these, governments and all that to build actual infrastructure products too. I just want to mention that there's a lot of capital it takes to build real, like what Amazons of the world have done. But there are opportunities to build a really vertical clouds, depending on what areas you can focus and build in these countries. So coming back to here, just want to kind of tell you, like, all these companies together, I know how much you read about it and really know. There are close to 86 really what I call unicorns, basically happened in this cloud area. Some of them went public, some of them still private. When you look at this cloud economy, created close to $1 trillion economy right now. That is not just only software, but really if you look at how Uber has created really, this gig economy where, people able to, also do part-time basis and all that. So it really has changed and it's going to continue to change. There's no question about it. And the good thing about really, if you look at technology is one area I think has been, saving our economy. I feel like we'll continue to, do well as long as we focus on creating more innovative products like what all these companies on the slide have done. So
finding, creating, opportunities to grow. I think that some of the areas I talked about before, it could be, enterprise, itself, like really, virtual meetings and online trainings, and also like a virtual conferencing. We are doing right now, but still there are a lot of issues if you look at all these virtual conferences right now, right? So I think, for example, you'll be able to provide some AI. As you know, like Zoom had some security issues. Why? Because of not able to validate really who is joining these calls, right? So there's an opportunity for you to build a security product. It could be facial recognition. It could be any other stuff. You'll be let people depending on, they already in your database. Those are the only people should come in, right? Like that, really, there are opportunities available with an enterprise, conferences or conferences like this right now, right? Entertainment also, right? I think like there's going to be a lot of entertainment opportunities, especially the content as all of pretty sure consuming right now from Netflix and all. There's going to be some more really where interactive entertainment you could do. A lot of this, online cooking and all this kind of stuff. People are going to be very innovative, coming up with content also for entertainment. Same thing, sports, like online sports and fitness, right? If you look at some of these fitness gurus right now creating a great online interactive stuff. But can you be a platform? Again, I go back to this. Can you be that providing a shovel for people who are trying to dig the gold? That's where really the opportunities are there. So getting good deal flow and as a VC, like really, that's where really, we are kind of looking at right now. How do we, help, portfolio companies? Once this COVID situation started, as I said, like we've been doing this stress test, but we did for the first 1 week. You kind of do this offensive way or defensive way of playing after that. But then we had to look at how do you grow the revenue, right? So we are able to look at really, how we can, help these portfolio companies getting more business. That's one thing really most of my time is going right now because we are able to actually, some people take calls, even though they are working from home, they're able to take calls and they're able to do Zoom calls. They're able to even close some deals, depending again, as I go back to, if we are giving that painkiller for CIO, if he has a remote workspace in India, China, wherever it is, and they have some security issues or they have some bandwidth issues, that's where you can provide. It could be, if you have a product in the edge computing, right? It's becoming a big problem right now because everything had to come to cloud. I'm pretty sure you guys have been hearing about edge computing, where really the technologies will be, you need the network, you need the platform, you need the application. And, where we also need a lot of AI, ML analytics to be able to do all the computing at the edge itself. For example, as you know, in a car right now, once, autonomous cars coming up, they will be generating, petabytes of data. How do you really process that data? How do you make sure like really the data, you don't have to ship all the data to the cloud, but you ship only some part of the data to the cloud, right? So the edge computing right now is already happening. As you can see, Microsoft, even Amazon, Google, everybody's trying to provide edge computing cloud. Same thing, you look at network guys, AT&T, Verizon, these guys also provide infrastructure with the 5G. So you can look at some areas really, to come up with the new ideas in those areas. I know we have a lot of telecom guys in Dallas. I think they have built some great companies. I learned a lot, as you know, being in Dallas from companies like Nortels of the world, and I know some of the companies are gone. They're not here, but people who work in these companies, they have some great ideas, and they can build really products on using how to make better, because we're going to use more bandwidth. For example, still at my home, sometimes my video doesn't work. We're still struggling really with the bandwidth. How are you going to solve that problem with the edge network? Can you solve that problem? So I think those are the areas really I see that you leverage, use this crisis for your advantage to build good companies, and same time investors also I see like there's some great opportunities. If you want to involve in technology companies, it's a good time to involve.
So we're about 10 minutes over our hour mark, and we have a lot of questions. So Ajay, if you want to just take a quick minute on this slide, and then we can go directly to the questions and try to wrap up in about 5 to 10 minutes.
Absolutely. No, I think that's absolutely correct what Dayakar was saying. Right now, it's a great time to launch new companies, products, and services. Building a successful company and investing are long-term endeavors. Necessity is the mother of invention, as Dayakar mentioned on bandwidth and edge. I mean, you have to follow the trends, and investors and entrepreneurs should continue to look to opportunities in AI, cloud, remote solutions, IoT, and other kind of emerging technologies that are coming about as a result of our new needs. You should take a deep breath and just kind of focus on the 10-year horizon. I think the opportunities are there. We shouldn't be, focused on a quarter by quarter analysis. We should look towards the long term, and execute on those opportunities.
Great. So thanks, Ajay. Where we have a number of questions here, so I'm going to try to just run through these quickly. So Dayakar, there was a question, actually, Ajay, this may be for you, how to manage finances during COVID-19. I think we touched on that briefly, but if you want to offer some thoughts on that.
There are a number of tools, right? So during COVID-19, if you just look up and down the stream, right, from real estate to the venture community, the number of programs that are available, the number of deferrals. I mean, if you just take lenders, for example, and we covered this on a prior talk, for the most part, lenders are being very observant in terms of what their credits are suffering from and how to shore that up. Because at the end of the day, even if you're on the debt side of things, you don't want to get into a situation where your borrower doesn't survive. So part of that is being candid and forthright with your investors and your debt providers, to help them understand what your situation is and how you intend on navigating through it. So, one example we've been seeing a lot of is PPPs. You're having a lot of companies that are going out and asking their landlords for deferrals and extensions and the like, just restructuring their leases. And if you can be candid and say, here's what we're trying to do. We've applied for the PPP. We're retaining our workforce. This is what our projections look like for the next several months and year. You'll find that people will work with you on that. So candor, I think, is extremely important. And the other thing, as I mentioned, that we're seeing is companies are revisiting how they handle processes and what they can do to reduce their burn. So if you're actively managing that, you'll end up, with a longer runway than you would if you kind of ignore those situations.
Yeah, I think one thing that I found helpful is first taking a look at where your company is in terms of, its financial health. Some companies really were cash strapped even going into this crisis. Some companies probably have some float to get them through the next 6 months or so. And some companies have been, just kind of holding on to cash and are sort of cash rich. And I think a lot of the suggestions you made are right on, particularly for those cash poor companies that really have to sit down, prioritize. You mentioned that earlier. And then also, renegotiating some of those leases, working with the banks and the lenders on additional financing. But I think there's also opportunity for companies that have a little bit of float to invest in more R&D and more products. So coming out of this, they're really kind of ahead of their competitors who are cash poor and are having to make those cuts. So it's almost, those that have a little bit of float to some degree have that competitive advantage, I think, right now. and really need to think about their position in terms of that competitive advantage, so that when you come out of this, you're actually coming out ahead. And for those companies, I think, that are cash rich right now, I think looking at synergistic M&A, I think is something that they should be looking at too. If there's, products that out there that are similar, it may be a good time to buy out a competitor who's maybe not as cash rich. And if they're struggling, this may be a good time to consider an acquisition. And that'll just put you really far ahead, as you move forward. So I think there are some different opportunities for, how to manage cash and finances through this time. But I think a lot of what you suggested, Ajay, and also Dayakar, I think you mentioned, is spot on. We have another question here, and this one I like. Any thoughts on manufacturers that are looking at bringing manufacturing from China back to the U.S.? Are there any specific funds that are covering those types of reinvestments back into the U.S. or investments into the U.S.?
Very good question. So I do not know. I'm pretty sure there will be, the way, as we talked about, it's a new normal. I think definitely, country is going to look at, the dependency on China already happening. We have heard Apple is already looking at right now doing some of their, maybe close to 20% of their manufacturing in India, right? Some of them, even also plan to bring here directly. But I do not have any list of those, but I'm pretty sure there will be, PE funds and, bigger, venture funds will be looking at, can they invest really? This would be more on the PE side, I would say, more than venture, because when you look at the manufacturing and all that, so those are the guys who will play in that market.
Absolutely. And to that point, we actually had a client, we signed a term sheet pre-COVID, and they're actually in the manufacturing space. And it was a term sheet to sell the company. And the initial concerns were obviously like, this is not the time to be selling a company. And what we've seen instead is with the sensitivities that we all have now for a global supply chain, which is obviously still going to be relevant. People understand the need to also have more control within the bounds of of their country to be able to manage the supply chain. So we've actually seen an uptick in interest on those types of businesses.
We have another question here. How is infotainment in the vehicle? How is that market in India? Dayakar, I think that's a question for you.
Infotainment in the vehicle you're talking about?
Yes.
Yeah. So it's interesting, right? And I'm going to again go back to this whole, always a focus on this infrastructure. So within the car, you're going to have a server, basically, right? That's where, like, already, if you look at HP, I'm pretty sure you heard about a company called National Instruments, right? So many of these companies, Dell, they're all working on an appliance which is going to go in the car as a server. Then you're going to have, companies like Microsoft and Amazon, they're all working what I kind of call the edge cloud, right? Then you could have companies like Verizon and AT&T, they're all building up and providing that wireless network to make sure, like, because when you are sending this petabytes of data, when you are taking like a 10, 20 cameras in a car, it's taking a lot of data, right? So for infotainment, I can see, like, I'm pretty sure, you can create the same, like, platforms like Hotstar created for our, whatever home entertainment. That will also now move into, because if you look at, Tesla car, like, pretty much is a computer running a car, right? It's not really anymore the old way of running a car, right? So within that one, if you look at their, even the monitor, whatever the screen they provide, it's a pretty big screen. Now you already have a lot of infrastructure already laid out. If you think there's a specific entertainment need to be provided, for example, my brother was telling me, like, he, especially COVID time, they're taking the Tesla car because Tesla provides a nice, some applications where you can see, even almost like you can make your car like a small fireplace and all that. On the screen you can see the fire and you can have a drink within the car. So I think it's going to be, you must have heard about really in Germany, they're doing all this clubs really pretty much doing entertainment, people joining in cars. So I think hopefully we're going to see same thing in India if you had to do this contactless really clubs.
Yeah. So I just want to be respectful of everybody's time. We're about 20 minutes over our webinar schedule, but I want to just say thank you. We have both Dayakar and Ajay's contact information here, so you can contact them directly if you have any additional questions. And I want to thank both of you for taking the time this morning to speak to our members and our community about venture capital and the opportunities for startups in today's current climate. So thank you so much again. Have a great weekend. Stay dry. And for those of you that joined us, again, a recording of this webinar will be made available on our YouTube channel. You can go to YouTube and search for the U.S. India Chamber of Commerce Dallas-Fort Worth to find the program there. And you can also find all of the other programs that we've hosted over these last few months there as well. So I encourage you to take the opportunity to listen to some of our other experts, and also encourage you to get involved with the Chamber if you think it would be helpful for you. The U.S. India Chamber of Commerce is a local chamber in Dallas-Fort Worth. We provide a variety of services, including networking and helping businesses to connect with various partners in the business community to help them continue to grow. So if you think that would be valuable for you, I encourage you to get involved with the Chamber. You can contact us at info@usicoc.org. So on behalf of our board and our chairman, Raj Kalyanderg, I want to thank you for joining us today. And if the Chamber can be of service or of value to you during this time or in the future, please don't hesitate to contact us. Thanks, everyone. Have a great weekend.
Thanks, Ajay.
Thank you.
Thanks,
Bye.
everybody. Thanks. Bye.